Welcome to Microcap Explosions. This is Mariusz Skonieczny. I am chatting with Colin Fisher, who is a fellow shareholder with Voxtur. And what I like about him is that he's good at taking complicated subjects and making it very understandable. So, Colin, thanks for joining me.
Thanks for having me. How's it going?
Hey, so let's talk Voxtur. Um, how to a fifth-year-old, how would you describe Voxtur's business? How can you help people, get a handle of what this opportunity is all about?
Well, I think, one of the things I chat about with a lot of people around technology is that there's two fundamental elements of tech. It's the what does it do, and then the how do you do it. And I find the vast majority of people get bogged down in the how, and they don't focus on the what. So I think with Voxtur, that's much of what has been happening as well, is that people focus on the how things are being done rather than just simply what is being done. And when you look at Voxtur from the what is being done, I think it's quite simple. You have basically a few key pillars that, in their totality, help digitize a real estate transaction from one end to the other. So, what do they do? The first thing is, if you're looking, and let's look at it from different types of transactions. So, if you're buying a house, so some people call that origination, but a purchase transaction. So you decide on a house, you have to go and get a loan or a mortgage in that instance. So you go to the lender, and the lender says, okay, I have to get it appraised. At that moment, companies like UWM will use A now to go and say, we need an appraisal on this house. They get an appraisal done. That's done. We now have an appraisal. That's it. Someone wants to get a house, we need to get an appraisal. The next step is most people, both the homeowner and the lender, want to know what the taxes are for that house. So they have a whole tax practice. And with that RPTA, the Real Property Tax Analytics, it does two fundamentally different things. One is it can provide you simply with what the taxes are, but it also has the ability to tell you what the taxes are going to look like at the next appraisal or assessment, I should say, at the next tax assessment. And all of the United States is on either a 4 or 5 year tax assessment cycle. So let's just use 4, which basically means that 25% of all houses in the US get a tax assessment every year. Now, most other companies just consume. They say, here's what it is. This is what your tax bill. They have no opinion as to whether or not in the future it's either too high, too low, or, and these are Gary's words in all his interviews, too high, too low, and by how much. So first you get an appraisal, then you want to figure out what your tax bill is. Once you figured that out, then the next step is you have to start buying the house. So they have, so then you have to get title insurance at that point. So they do title. And once title's dealt with, you have to go into the actual purchase of the house. So then they have escrow, which is a whole thing, money going in, transferring around all the legalese around it. And then you have the settlement services. And that's actually getting the house to being purchased, title, transfer, all that fun things. So that's it. It's not very complicated when you look at it from the what are they doing. They've basically digitized from the moment you conceive the concept of buying a house to the settlement. The next type is that at refinancing. Refinancing, there's an appraisal many times will get done again. They may want to do the taxes again. Title will get done for at least the lender in the US, as you know. At each time there's a transaction, when it comes to a lender, you have to reinsure them basically, especially if you're switching lenders. So you have that. And then the third one is at a foreclosure. And a foreclosure is really the settlement services, the title, and the appraisal. Because during the foreclosure process, you need to know what the house is the title clean, and it's a whole bunch of paperwork to get through the machinations of the law. So the whole automation, and I call it robotic process automation for the settlement services. So that's sort of all of it in one encapsulated area. getting into the how elements, then you can start to get bogged down. But the other way to look at this company are the different silos. You have appraisal, tax, title, escrow, and settlement services. And then you have what I call the consumption layers. So you have sort of a professional consumption layer. That's the A now, which is the workflow for lenders, lawyers, settlement, all of that stuff. And then the newest layer that no one talks about is the Voxtur Wealth. And that Voxtur Wealth product or service is a huge category creator, because no one's created that yet, and it consumes all the information. So you can look at your Voxtur Wealth statement, not dissimilarly to a stock brokerage account, right? You could pull it up and you can say, here's my house, here's the title, here's the insurance, here's what a relative value is, because they can run AVMs on them real time. So you can get all of the information in one spot. Who's going to want that? Family offices that own a lot of property. Lawyers are going to want it. All the information's in one place. Tax accountants are going to want that, or just accountants writ large. So you have sort of consumption layers and then creation layers. And the creation layers are going to be the appraisal, the taxes, the tax, the title, the escrow, and the settlement services. So that's how I look at this company to keep my sanity, which is tenuous at best.
Yeah, thanks a lot for this explanation. So the real wealth, like you said, Voxtur Wealth, that nobody talks about. It's kind of like a brokerage account in a way, where you can just log in and see all the information on the properties, where right now you don't have something like that.
Well, if anybody has ever dealt with if anyone's ever dealt with real estate, and especially settlement of estates, it's a nightmare finding the paperwork, figuring it out, just getting all the paperwork, all the information, everything in one place. So that putting all of the information in one area is a very powerful tool in and of itself. It'll speed up settlement, and a lot of that information can get pulled from the ANow platform, because they're going to be creating it. They're going to create it on the ANow platform, and they'll consume it on the Voxtur Wealth platform. And the other thing about ANow is that with there's always this talk, and maybe I'll delve in a little bit on the how. There's all this talk about, how are they going to integrate these companies? What are the difficulties around integration? And the way I look at these companies is they're all independent companies that sit on their own bottom. They all work independently. What I think is going to happen is the workflow and the consumption for the professional layer at ANow is going to pull the information. They'll pull it from Apex. A lot of people forget, that there was the Clarosity acquisition, the Apex acquisition, then the title, Brightline, Infotech, Voxtur assets. Then we had the ANow, and then recently Zome, and then Benutech. People try to figure out how they really integrate as subsets. Like the Apex primarily was working in the tax assessment space. And, tax assessment and tax assessment and appraisals have a lot of overlap. At the end of the day, you're creating a price. In the case of appraisal, it's so that products can be created or provided to it. So in the case of an appraisal, you're going to do a mortgage, or you're going to do title insurance, or you're going to do settlement service or escrow and all that fun stuff. In tax, it's just to make sure that the municipality is charging the right amount, because they don't want to charge too much, because it creates a potential liability in the future. If they don't charge enough, then they're eschewing present day revenues that they won't get back. So the municipalities have a need to use it. That APAC acquisition is a fantastic acquisition, partly because it had, I think, 2,200 municipalities across the US. But when you do the floor plan, it has the ability to take oblique satellite imagery and check the floor plan to see whether you're lying or not. Because if you put out an addition on your house and it's a perfect square, and you may say, oh, that's 100 square feet, and the satellite imagery says, well, that's a 4,000 square foot addition you've put on there. You can check that, and that's going to change your tax assessment as well. So that information, and that can also be used for appraisals, right? That information is also used for appraisals. So there's a lot of overlap when you look at tax assessment and tax and appraisal. So assessment and appraisal have a lot of overlap. Who consumes it? Well, the municipality consumes it for the purposes of creating a tax bill, and the lenders and whatnot use that same information for the purposes of creating a mortgage that isn't going to put, they're not going to lend too much money against a house. And then the title and all the other information should code that data package. So, if you look at the companies as their individual companies and which areas they support, appraisal, assessment, title, escrow, and settlement services, you see that there's certain elements that have a certain amount of overlap. But I think if you understand it as how a transaction happens and who needs what at what time, I mean, the other element of why Voxtur does well in up markets, down markets, sideways markets, that tax business alone, the tax assessment business, remember, 25% of all houses every year need an assessment. And in Ontario, MPAC, which is the Municipal Property Assessment Corporation, is the largest tax assessment authority in North America. So we already do the work for the largest 800-pound gorilla in North America. Now with the Apex acquisition, we can now, because of the Apex acquisition, we can simplify and continue with the tax assessment, but we can also do the desktop appraisal better because we already have that as part of the workflow. And when that desktop appraisal a report came from Fannie saying that, we're going to allow desktop appraisals to happen permanently now, we already have all the infrastructure. And then, one last thing I want to get to is, with ANOW, the UWM, they put out that video that said, 70% of their business now goes across their appraisal direct platform, which is basically ANOW. When you look at that, you understand how quickly the adoption and the scalability of it is. And then you take the ability to add, the artificial intelligence. There's that article that was really sort of glossed over, but where they talk about how the quality control elements of ANOW are to the point where quality control that would take up to 6 days to do, they can now do in 2 hours because they're using machine learning, decision tree type stuff, and some artificial intelligence, probably using some NLP, natural language processes, and most likely some deep learning when it comes to the imagery. But when they look at that in its totality, at the end of the day, what does it do? It makes it quicker, faster, cheaper. And that's what most people should focus
on. You talked a little bit about that desktop appraisals and Fannie. There was an article that was published by Fannie in December, how they were talking about the closing costs being higher than the down payment for low income buyers.
Right.
Do you have any comments on that?
Well, you and I chatted about that. I mean, I'm always of the opinion, you got to look past the obvious, like that which is on paper. So, when you and I were chatting about it, I was saying, why are they doing this? Like, why would any company put out a report highlighting a problem that you don't have a solution to? Like it makes no sense. Hey, look at this. I've got this problem and this problem and this problem. And you know what? I can't do anything about it. That's not what people do. People go, we've got this problem, this problem, this problem. And by the way, here's the solution to the problem. Here's the solution to the problem. So, from my mind's eye, that basically, I forget who it was who said this, if there's a gun on the wall in the first act, it'll be used by the third act. Someone said it was like Cherkov or something like that. Any event, if you read it like that, you see this stuff. So, they said, what were the two biggest costs? It was title and it was appraisal. Well, they've knocked down the appraisal element in short order. The next one they have to deal with is title. And so from my mind's eye, we've seen the gun on the wall in the first act, and I think we're either at the end of the second act or getting close to you in the third act. So at some point, I would anticipate that there's going to be some declarative statement that says, look, we need to solve this problem, and here's how we're going to solve it. And if they go that way, Voxtur has a whole title product with patents and processes that are protected. So, I think that it would bode exceptionally well for a Voxtur if that comes out. And, I've got a bit of a PhD in Gary Ease, and, earlier in the last year, I said, if they're putting out $60 million targets, that the revenues are probably going to be closer to $90 to $1 million. Because I know one thing about Gary is that he hates, absolutely, it causes him physical pain to miss a number. So any projections that he put out, I would, I think I basically added 50 to 60% to it.
So that's interesting. That's interesting that you're saying this, because I think I'd like you to make it more clear, because they put out guidance for 2021, and I think it was 80 million with foreclosures, and then foreclosures didn't happen. So can you walk us through this?
Well, at the beginning of the year, they said point blank, $60 million if the moratorium is not lifted, $80 million if the moratorium is lifted. Now, at the time they put that guidance out, it was widely anticipated that the moratorium was going to lift somewhere around June, July. Now, as we know, fast forward to present day, sometime around January, it really started to lift. So 6 months behind. There were extensions, and then, there's the federal level and then the state level. So there's all these different machinations that happen, and it's just starting to happen. And if you read, there's this great guy, I'll send you the link. You saw the link. It was from that guy, Calvin Froage, on Twitter. He posted that thing of that guy talking about foreclosures. And I thought he was absolutely spectacular. But, there's sort of the quote unquote party line of, they're not going to be a tsunami of them. And I agree. I don't think there's going to be a tsunami of them, but I think there is a solid reason for why foreclosures are going to be higher than people are anticipating. But
just the foreclosures, I mean, in a regular market, you always have a certain percentage of homes that go into foreclosure. So
100%,
just normal. But going back to your numbers, so
they said 60 million, then they said 80 million so 60 million if foreclosures don't get lifted, for a moratorium doesn't get lifted, 80 if it does get lifted. And here we are, present day. And, they've updated their investor relations deck that says 2021 will be 95 million, right? So we know that they roughly know, or pretty close to know, what their revenues are for 2021. And my suspicion is, if it's on paper, they've left some room for additional exceeding of that number because, listen, I don't know. They've been making acquisitions quickly. Most of the companies are private. The Zoom acquisition is probably the most, from a financial reporting point of view, the most disciplined in that it was a subdivision of a publicly traded company, which is one of the reasons why it's easy to know what the revenues are roughly going to look like for two fundamental reasons. One is the financial reporting of Mr. Cooper isolated Zoom as a sub division. That's number one. Number two is on the Q3 conference call, they said they were roughly doing 6 million or 60 million a year, so 5 million a month. And so I look at that and go, okay, if you take it at face value, then they're doing roughly 5 million a year, a month from Zone. It's not complicated. You can see the numbers on black and white, but from a discipline and from a reporting point of view, the financial team at Voxtur has their work cut out for them. Anow was a young company, the Voxtur Benutech, the Voxtur Brightline, all those acquisitions, none of those were public. Benutech, private company. So there is a whole bunch of disciplines and processes and controls that need to be done for an audit level versus just, as a private company. So I think that they're leaving some wiggle room because revenue recognition, timing, they're translating back to Canadian dollar. So there's all those complications. So one of the things I like about this company is that it's very rare to get a company of this size with the board of directors quality and the management quality that we have. It's exceptionally rare. And so they are, as a group, hyper conservative. That's one of their drawbacks because I think as a whole, they're not used to leaning forward on their skis at all. I mean, James Kelsey came from the Bank of Montreal. You've got Mike Harris, who's the former Premier of Ontario. You've got Grant Moon. You've got Christy Kamhout. All of these people come from big companies. And so it's not in their nature to lean forward or to project or to have any sort of desire to say anything other than that which is known. So if anything comes out of this company, you got to add to it because they just simply do not have the organizational chops to look forward and feel comfortable as a group. It's not in their DNA.
Yeah, and going back to just percentages, you see, they guided 60 million in 2021, and based on the presentation, it's going to be 95 million. And I'm already taking out the foreclosure or the moratorium that didn't happen, which means that they underguided by 60%, 60. That's
100%. Right, which to me is problematic. I see that as problematic. I don't want to. I mean, I want to be. I gotta, and I rarely do this. I gotta watch what I say. But there's errors of omission and there's errors of commission, and in some ways I feel like they err on the side of omitting things so that they overshoot. To me, though, if you guide at 60 and you come at 95, that's an error. It's not correct. And it would have been better if they said something earlier to the effect that it was 95 million bucks. That's my opinion. I'm just some asshole who's got an opinion. But so, what'll happen is the market over time corrects for this, right? They start to say, well, if you put out $1 of guidance, so maybe it's $1.60 of guidance. Okay, so now we got to start adding 60%. My belief, though, is that, and in their defense, there is a shit ton of stuff, a lot of variables going on. You have interest rates going up. You have these big changes coming, desktop approval. Maybe there's some title stuff. What's happening with foreclosure? The Benutech deal, the Voxtur deal, like that Voxtur wealth, from my opinion, is going to be huge. I mean, I've spoken to a few people who are property people. They fucking all love the idea. They think, oh my God, I would need that. And let's be clear, they have dough. A lot of these people have a ton of dough. So family offices are going to want it. Lawyers are going to want it. Accountants are going to want it. Banks are going to want it. Trust codes are going to want it. Credit unions are going to want it. Everyone's going to want access to this tool. And it's also going to be where, for example, the check my assessment can get used, right? Like you've got 10 properties, check my assessment. Going back to the idea of that this company does well in both up and down markets. So first you have the tax assessment, which is incredibly consistent. Then you have foreclosure. So if things start going sideways, our foreclosure business will crank up. Then you have the asset managers. Remember, asset managers have to price through a statistical model of sampling a variety of their assets to check the pricing on them. So they have to do their net asset values. So they're going to need our appraisal tools because they're faster, quicker, and more accurate. But they're also going to want to check from time to time their taxes. Like, are we paying too much, or should we expect a big cash flow change if interest rates or if tax rates go up? So there's all of these other, like everyone focuses on the appraisal like it's the only thing we do. It's like one of 5 or 6 things we do.
Yeah, you see, I when I talk about this company, I start with the appraisal because it's easier to connect with people and explain, start explaining the process. But you're absolutely right. This is just a one tool in the chair.
Right. So the way I look at it is you've got appraisal, you've got tax assessment, you've got title, and then you've got the escrow and settlement services. And that appraisal gets used for buying, refinancing, foreclosure, and for net asset managers. There's a whole laundry list of people who need that tool. Tax assessment, everybody needs that tool. And then when you get into title, if we get the opportunity to start producing a product, I mean, that's a quantum leap. Then you get into the Voxtur Wealth. No one's doing it. No one has a tool like something like Check My Assessment. If that happens, now you've got another massive, it's like the iPod. It's like a brand new category killer. iPads, category tablets didn't exist, except in Star Trek in the 70s. And now here we have them, so there's category killers and there's category creators. And remember, Gary founded Altus, they bought Argus and created a whole category killer for commercial real estate. I mean, there isn't a person that you can't swing a cat in the commercial real estate space and not know Argus software. So this isn't some concept, that he's going to be able to do it again. I have absolute, utter, complete conviction that this is happening again. And part of it is because if you look around and go, does it exist? And then you say, look around and ask a few people, do you want this? They're like, damn right I want this. This is a huge pain point that no one can solve except for Voxtur, because the power of Voxtur isn't just in the appraisal, just in the tax, just in the title, just in the escrow, just in the settlement. It's in the cross linkages of these companies and the ability to bring this information and then push a transaction down the assembly line of figuring out how to make a transaction. They're creating the assembly line. They're creating the cross linkages. They're getting rid of the siloed information. That's most of the power of this thing.
Did I tell you that I love your passion? Yeah.
Fuck. It's called insanity. I almost thought about doing a whole bunch of mushrooms and then doing this call and seeing if you'd figure it out.
Oh, that's funny. Let's talk a little bit about Jim's interview. He just did a interview with Midas
James
letter.
West.
Yeah. And do you have any thoughts maybe on some of the things that he
Listen,
said there?
I two things. I love that he didn't say sine qua non again. I was just happy with that. He's gotten much better, I think, at, there's a great, I know all these quotes, I never know who the hell to attribute them to, but there's this old line that says, I apologize for the length of my letter. I didn't have time to shorten. Now, when Jim first, if you watch Jim speaking about Voxtur over time, his initial messages took 25 minutes to say something. Now it takes him 5 seconds to say the same thing. It's more elegant, it's distilled, it's simplified, and he's an excellent speaker. And he's obviously very intelligent. That can be a problem though, because I make it I make great strive. I strive to make sure that I don't use a lot of jargon, because jargon is the killer of understanding. People don't understand unless you're part of an industry. And the reason jargon exists is that it's a way of simplifying speech or speeding up conversations amongst people who have deep expertise, and so they can simplify it and use jargon. What I've also found is a lot of people in the first place don't understand what jargon is. Like they make all these assumptions, like SaaS. Like, I hate the word SaaS. SaaS is basically, I tell people this all the time, the original AAS as a service is RAAS. And it's called real estate as a service, and it's called rent. Like, it's a billing model. Now, very good friends of mine, Art Mesher, Willem Gala, these guys are the godfathers of SaaS. And I'm not being hyperbolic. I am literally saying these guys are the first guys to create the concept and start billing as SaaS, start billing from on-premises perpetual licenses to software as a service. And, SaaS now gets bandied about. It's a billing method, for Christ's sakes. That's it. The real power is in the moat of the SaaS, quote unquote, service that you're providing. So I used this once when I was in a meeting, and I said, and Art Mesher and I had this conversation, and he sort of said, what do you think is the most powerful type of billing? And I said, I guess contractual billing, where what it is, prescribed for a period of time. And he said, that is wrong. And then he explained to me, he said, the best is when it's month to month with no contract, but they need your service so badly that you could crank up the fee every single month, and you're going to get very little cancellation or no cancellation. So I thought about it. I was like, yeah, you're right. And, so then I sort of thought about, imagine if you had a pacemaker and the pacemaker kept you alive, would you pay that bill? And so I sort of assumed it'd be like 99% until you died. Well, funny enough, a couple of days after I used that example, I spoke to someone, and she said, my aunt is like 98. She's got a pacemaker and she wants to die. It's brought her back from the light a few times, and she finally said, I can't do it anymore. And the doctor just called them up and scheduled a battery replacement for her, and she said, no, I don't want it. She died subsequently a few months later. So I said, okay, maybe it's not 100%, but it's a really high recurring revenue without a bill, and you've got the billing. And so the issue is to really be able to understand a company, really understand it, is can that company work and be properly compensated, and their business stays intact if they don't have contracts and it's month to month. That's when you really know if a business is properly really has a powerful moat. If it's only relying on contracts, eventually because what Art was saying is that at the contract time, everyone's beating the crap out of you, and because you're focused on the contract, they know that you want that contract. They're going to beat you up over it. But if it's no contract, it's month to month, then you really know that you've got a powerful business that people really know. I mean, one of the other things is a lot of people don't look at is DSO, day sales outstanding. If those things are lengthening all the time, you've got a problem. Like there's so many ways to check the quality of revenue and whatnot, but I would prefer that Voxtur had no contracts, because I think who the hell are their clients going to go to for half of this shit? Once, like when you take RPTA for MPAC, who are they going to go to? Who else is going to do it? No one. That's who. No one. And
I mean,
when you look at,
their service is so ingrained
that's
in the
right.
upper. I mean, it's like without it. I mean, the same thing with UWM as an example. I mean, now they have 70% of their workflow going through A now. Like
Right.
if we took the oxygen away from them, I mean, their business would just be just
It would
dying.
be problematic. So
Yeah.
that's why I use the pacemaker analogy. It's, you want to talk about something that's ingrained in your system, something that makes your heart beat, you will be paying that bill. So, the real benefits that, and like going on a slight rant, but SaaS versus cloud. Cloud is a much more important understanding of a business, because what it means is that your marginal adoption of a new client and a rollout of a new client is immeasurably easier. Your costs are minimal. Your scalability is maximized. Your ability to do updates and maintain the system is maximized. So cloud is a much more important concept from a technical point of view. Like, it's hilarious. Altus, which we constantly get compared to, they just started a cloud-based iteration of their product. I mean, what are we, 2022, and these guys are still chiseling in stone? And the other problem I have with us being compared to those guys, if you look at their revenues, 172 million, and I'm probably one quarter off, but it was 172 million. 111 million or something like that came, or 101 million was paid to employees. 33 million went to office expenses and leases. So out of 173 million or whatever the heck it was, 134 goes to humans and housing the humans. Where's the tech in that? Like, this is the thing that makes me crazy. And then they go, oh, and they only get a 6 times top line revenue. Right, because they're not tech. That is not tech. All right, I'm ranting. The coffee's kicking in.
All right, that's good. So last thing before we wrap it up. Jim said that they're going to do some kind of forecast for 2022, and he said that it's going to be like a triple digit. So we don't know what it's going to be, but based on their history, it's more likely going to be a low bolt, and then they're going to beat it. So now I want to know, like your opinion. Like, how big do you think this company can
So
get?
here's what I think they're going to do. Here's my opinion, and I'm just like, because I'm surprised he said triple digits, because I'll tell you what I think they're doing. They're probably going to do a triple digit increase from either the 60 or the 80. Because right now, we all know that they're somewhere around 40 million in revenue for this quarter. Now, Q4 is also a historically weak quarter. And by the way, before we go, I want to talk about how people value this company. But Q4 is a historically weak quarter because you have Thanksgiving and you have the Christmas holidays. I mean, it knocks a ton of business off the table. So we know we're coming out, and with this quote unquote for guidance, whatever the hell you want to call it, because it's post the period before the reporting, they put out this 95 million number. So I don't think it's triple from 95 is my thinking. I think because that was never really put out as guidance. Technically, that's not guidance. It's just an IR update on their deck. Their real guidance was 60 and 80. So my worry is that they're going to do a triple digit increase from 80, which is 160, which is exactly our run rate. And it's exactly what they would do because they are an incredibly conservative firm that has DNA of large banks strapped into the DNA of a fast growing startup. I mean, it's not a holy alliance when it comes to communicating from that perspective. Like, you look at every other dog shit company that's out there They fucking promote the fact that they put their fucking shoes on in the morning. And we have wins that we can't talk about. And this is the antithesis of a promotional, this is anti-promotion stock. That's what this is. So whatever they put out, in my mind's eye, listen, I'll tell you why I believe revenues are going to be closer to 350 to 500 million. Why? Foreclosures. Why? Tax and the new products. Why? Voxtur Wealth. Why? Appraisal businesses getting strapped on and new clients coming on board. Why? Because if title comes on, that 500 million might be shy. Like, there are so many business lines that this company has that where they're winning and they're going to continue to win, that I just cannot imagine. Plus, let's also talk about the fact that that Zone acquisition. I don't think people have their head wrapped around what a great acquisition that was. It's a bunch of business that is at low margin, causing some problems on our margins right now, but we know it's going to flip to higher margin business, number one. Number two, Mr. Cooper took 40% of that transaction in shares, and they have a 5-year lockup on that thing. Who the fuck does that unless you believe in what's about to happen? No one of that size company takes shares in a small company at 40% of transaction with a 5-year lockup unless they have belief in the thing.
Yeah.
Now, one last thing that's driving me fucking mental. People, okay, a tangent to a curve, a straight line, like trying to figure out the slope of a curve is a difficult fucking thing, okay? And the more exponential the curve is upward, you have a hard time figuring out what the tangent is to the curve, like to figure out the slope of a curve. So we have a company that's obviously accelerating in its growth, obviously accelerating and exponential growth, not linear, because we had Q1 was up like quarter over quarter, like 40%. Q2 was up like 30-40%. Year over year, it was like 100 and something percent. Then it was like 200%. Then the last Q3 was like 300%. Q4 over Q4 is going to be somewhere between 600 to 800%. Same quarter, year over year. People go, oh, well, if you look at trailing 12 months, well, trailing 12 months is a dog shit thing, because if you have an exponential curve, you have a part that almost looks linear when you're looking at the curvature of this thing. So you always have to use the exit rate. And the other reason you have to use the exit rate is because in the last quarter, you get all the fucking shares slammed on you, but you don't have all the revenue. So if you go back 12 months, you're taking all of today's fucking share count compared to a fucking 12 months of goddamn fucking revenues that's completely diluted. So you always have to take the exit rate, because if you're going to take a tangent of a curve, you have to use the fucking most relevant part of the goddamn curve if it's exponential. Jesus, I fucking hate people and their stupid fucking linear math with no ability to find goddamn context. It makes me fucking crazy.
Are you sure? Are you sure you haven't been taking any mushrooms since we started talking?
Dude, I'd be chill as fuck. You heard me on the phone that one night when I had taken like 3 grams, 4 grams of mushrooms. You couldn't even tell.
Yeah. Okay. Cool. Very nice. So talk to me about the valuation. You wanted to talk about the valuation.
Well, that's part of it, is that people constantly say, like, oh, you've got 400% dilution. And, so they take the present day share count and they take the trailing 12 months of revenue. It's like, give me a break. You got to take the exit revenue and the exit share count. Because normally, if you actually go into it, they do a time-weighted share base, right? No one looks at the time weight. I haven't met an analyst, a professional money manager, anybody that actually goes in and looks at the time-weighted share count. No one does it. No one fucking does it. So people take the fully diluted share count against a very minimal amount of revenue. It's a completely blown apart thing. So then you can say, okay, well, let's look forward. If you don't want to look forward, at least take the current run rate with the current share count and compare those two. Because year over year, Q4 over Q4 is almost is 600 to 800% increase in revenues. If we come out at 40, so I think we did 5 million Q4 2020. 2021 Q4 let's just call it 40 million for simple fucking math. That's 800% increase in revenues. Right? The share count admittedly has gone up. There's people, they're like, they were pissing on the Anow acquisition. One other thing that has to be looked at. The types of acquisitions and how they looked at. The Apex acquisition was done for like $4 million, right? I think it was in Q2 earnings call. Gary said that revenue's up like 7 times. Okay, so we have that one. We know that the Brightline foreclosure business has been mothballed, and Gary paid a lot for it, but there was technology built. They referred to it a number of times that they basically renovated the store and tuned up their technology so that when it opens up again, they can process way faster than anybody else. They've tuned up the whole system. So we have a whole acquisition that has been firing on like a third or a fifth of their cylinders right now. So we have one that's dragging us back right now. You have to remember, for the whole year, that acquisition has been a drag on our relative growth. Then you take Anow. People, they paid 23 times fucking yeah, they paid 23 times knowing that with the combined company, then 2 months later, they can go out and win bigger clients. 2 months later, they go and buy, they go and get UWM. So now their revenues, and I think Jim said was $700,000. My one problem when Jim speaks is I never know if he's talking US or talking Canadian. So my guess is he's talking US, which means it's around 800,000 something, which means it's about 10 million bucks. So that means at the $30 million acquisition on that one client, they paid 3 times sales. Do I think they're going to stop at one client? No, I don't think they're going to stop at one client. So, I am one of the few people on the planet who has sat across the table from Gary and negotiated with him. I can assure you, he is not a pushover. He's not an idiot. He's exceptionally fucking shrewd and deeply insightful. It is a fucking terrifying place to be, is debating and arguing and negotiating against Gary. So, and we almost murdered each other a few times. Now we love each other, but we almost murdered each other a few times. I can assure you, every one of these acquisitions, if anyone doubts Gary's abilities, go give your fucking head a shake. So you look at the Apex acquisition, at least 7 times growth to middle of this year. You look at the Anow acquisition, 2 months later, it went from 23 times to less than 2.5, 3 times. And 1 or 2 more client wins, and it's going to be basically bought and paid for under 18 months. That's how Gary acquires. He is a stone cold genius in this area, a stone cold genius. There is no one better in this area than Gary, not a fucking soul. And now we have these other great attributes of having a Jim to run and be the executive of the company, run the company, get these things moving. So, I have nothing but confidence in this. But when people acquire and they're looking through the rear view mirror, when the slope is vastly different in the rear view mirror versus the front forward facing look, because you've got exponential growth. And so, it is an understatement to say, I think we're currently trading closer to 0.75 forward revenues. And we could be trading at 0.5 revenues forward if a few of these things kick in.
So that was very insightful. And so, what do you think is going to be the aha moment for the market?
Well, I think, listen, I've come to the conclusion that I see the aha moment way before everyone else. I watched The Big Short years ago in a theater when we could actually do that. And I was laughing literally 10 seconds to 15 seconds before everyone else. That's what this feels like. So I don't know when the aha moment's going to happen for people. I think it's going to be one of these classic, slowly at first and all at once. So I think that the marketplace as a whole is eventually going to wake the hell up that, we're trading at a massive discount. People are looking at Redfin, Open Door, Doma, Zillow, and realizing that their tech isn't really interesting. I mean, Open Door is an arbitrage of renovation. This iBuying bullshit is a fucking moron's paradise. Like the idea that, I'm smarter than one of the most sophisticated markets out there, which is real estate, with tons of dough going at it all the time, saying, we happen to have the common sauce that no one else has. Like, to me, it's a fool's game. And because the real value that here's what I know about most real estate investors. They find very specific types of deals and they have a very, very specific plan to add value. And that is very difficult to model, to create as a platform, to standardize. It is
to scale. It's a very hard model to scale.
Exactly, because there is no scale, because it's hyper unique. And so I look at this going, this iBuying stuff, listen, I fucking missed the cannabis trade, but I was right in the long run and wrong in the short run. The short run, there was a mania about it. The long run, 90% of those fucking things have gone to zero. But, when part of investing isn't just how far something goes, from $1 to $17 or $1 to 32. That's the length of the trade, I call it. The next part that's most important is the width of the trade. How confident are you in that trade? Did you buy one fucking share and go from $1 to $32? Or did you buy fucking $50 million and now it's worth $1.5 billion? Tell me which one you fucking did, because that's the other part of the trade. And the width of the trade is totally tied to your confidence in the underlying company. And so I fucking hate the stock market. I hate the game of the game. That bullshit, it's going up, it's going down, it's fucking RSI this, it's this, that, and the other shit. I fucking hate that because it's the game of the game. What I understand are fucking companies. Is the company doing well? Because eventually the morons, the unwashed masses of people who buy stocks will eventually agree on a price that's quite reasonable. Like a lot of morons banging into each other fucking finally can come up with a price. But the gamesmanship of this or that or the other thing, like I look at Voxtur, I don't give a fuck what is happening to the overall economy. I don't give a fuck what is happening, because here's the thing. This is not General Electric. This is a tiny company still. And they're going to do I think they're going to do $500 million this year, maybe more. And nothing that the overall economy is going to do is going to impinge that. And the reason is, one of the things that Jim said that was most poignant in that interview was shit is slowing down, so they have time to sharpen their axe. They have time to look and work at this problem. When you're making so much money hand over fist, the industry as a whole is lazy. It can't solve the problems. As things are now breaking pace, slowing down, they now have time. That is our perfect time because when things start slowing down, then you start looking at costs. You start looking at how do we get bigger
you mean
market share.
I just want to make one thing clear. You mean the clients, not Voxtur. You mean that if the interest
the clients, the industry,
if the interest rates are going up, then their costs are going up, and they're looking to be more competitive, and they're looking for solutions like what Voxtur has to offer.
100%, 100%. That's exactly right. And so when I look at this, I go, what is going to make this work for us is that, going from 100 million to 500 million is still a drop in the bucket. Going from 100 million to 3-4 billion is still a drop in the bucket because they're just going to take over more market share from their competitors, right? There's the pie can get bigger, but you can still have, if you only have a sliver of a pie, you can still keep getting. When you're as big as GE, you're the whole fucking pie. So if the pie gets bigger or smaller, that will impact you. When you're a Voxtur, you're going to, in my opinion, they're going to grow regardless of what that is happening. And in some ways, some of this slowing down helps us because people have to sharpen their axe, they have to reduce costs, they have to increase efficiencies, and they have the time to do it. When you're running, if you're a restaurant and you're running full bore all the time, somebody comes in and says, hey, you should spend some more money on marketing. Fuck you, I can barely keep the people going. Oh, you should be doing this because you can increase efficiency and throughput by 10%. Fuck you, I can barely breathe. Like when you're slammed, you can't do it. When shit calms down, people all are going to look around like, how do we name one of 20 problems? And that's what they're in the process of doing. So, out of that interview, that's what I found to be the most poignant out of Jim's element, for me at least, was, that the market is slowing, the industry is slowing down a little bit, and it's going to give us time for them to go, oh, yes, we need this. Okay, let's make this adoption. Now, UWM, to their credit, ran hard, ran fast, got it implemented. Then we hear the update, 70% is rolling over the appraisal direct. And then you see just after that, they say, you know what, we're going to pay the appraisal. And you know why they're doing that? Because I'll send it over to you and we can send it out. But, in January, house sales went up because people are trying to lock in before the interest rates crank up. So they wanted to capture as much of that as possible. So, they're a pretty sharp, aggressive group over at UWM. And I find more and more of if you really want to understand what's happening with Voxtur, is look what's happening in the industry, because that's where we're going. That Fannie Mae report, that FHFA report, that basically is lining up saying, listen, everything is going into the net of Voxtur. And people are, then, I saw that thing, you were having that debate with that gentleman online. And, I said, it's like, oh, some guy said something bad about it. It's like, those are Yelp reviews. But UWM says 70% of their business is rolling over the rails. So a Voxtur, I don't give a shit what some guy got a burnt fry. Okay, fucking burn the goddamn restaurant down. Or maybe, just maybe, that when the UWM says 70% is going over the rails, that means A, the appraisers like it, B, UWM like it, C, clients like it, and D, it's fucking working and scalable.
No, that's fantastic. So we're up to 1 hour now. So let's do this. Do you have any concluding thoughts before we wrap this up? And we should do it on a regular basis.
Yeah, dude, I'm not fit for human consumption on the best of times. You want to do this regular? No. Listen, listen. At the end of the day, Voxtur is not a complicated company. If you look at it from the what do they do, and if you look at it from each line item, like buying a house, refinancing a house, foreclosing on a house, checking asset values, and then from the purpose of professional consumption, you have the A-Now platform, and from the purposes of sort of what I would call retail, let's call it, or family offices, or prosumer type stuff, you have the Voxtur Wealth. And then I could go down the rabbit hole of explaining some of the other ancillary elements that are going to go on to, but I'll leave that till when they finally roll stuff out and we actually see if they come out. But it's not a complicated business. I think growth has this inevitability to it, and I think that we're going to have ongoing, ever better financials and results.